Hey, good morning, everybody, to you. My name's Brent Moores. For those of you who don't know, it's Trader Talks. I'm glad to be with you. I'm also joined by Mike Fairborn in the chat today. Kevin's out today, but you know what? He'll be back soon. So I'm glad to sit in with you. I see some familiar names in the chat, and I appreciate you. If you have questions, you can type those in the chat. I'll do my best to keep up with those, and Mike's going to help me out too with that. You can follow Mike or myself, by the way, on X at Brentmore CS, at Mike Fairborn CS. And we'll talk about the agenda here in just one sec, but let me remind you, just from the get-go, the information today is for general informational purposes only. It's not an individual recommendation or personalized investment advice. And we'll look at individual stocks today and indexes, and they're not recommendations. They're just looking at the market, just showing you examples here. The paper money application, we'll be looking at the Thinkorswim desktop software. That is for educational purposes only as well. It's a good demonstration purpose, and it is helpful. So I'd encourage you all to download Paper Money from Thinkorswim and play around with it. And past performance is no guarantee of future results. All investing involves risk, including loss of principal. And just remember that you know we're going to do technical analysis today. There's going to be an emphasis on technical analysis, but Schwab does not recommend the use of technical analysis as the sole means of investment research. So having said that, let's look at the S&P 500 right now. Of course, the bell just rang a couple minutes ago. We're up a little bit today. A lot of that is, part of that's actually spurred by the NVIDIA earnings that we had last night. And we'll get to that in just a little bit. We'll look at that in more detail. But right now, what I'd point out is this. On my chart, I have a 20-day moving average, that's in red, okay? I have a 50-day moving average in blue. And right now, they're both sloping up, and we're kind of hugging that 20-day moving average right now. Overall, the trend of the chart has been positive, which is great. And we also have what I would consider, this was probably kind of an area of support, potential support in this area here, where we seem to have bounced off a few days ago, and we're holding this. If we start to break down below this recent low here, it wouldn't necessarily be tragic, but that would be, a significant shorter term break right now. But the general trend has been going up. And so we can identify different support levels. This would be one. Looking at the 50-day moving average would possibly be a level of support. And then down here would be a kind of a significant break. I think if we broke through those levels, and that would certainly be a more significant break. If you look at the magnitude of the pullbacks we've had, it's not surprising when we see a pullback like we saw right here, and people often get panicky in that circumstance. But no need to get panicky in the market, but use these as key levels to key on, to focus on. And so even if you have a few down days, that doesn't, no reason to panic. You can look for those key levels, and then if you have something in mind, and now that something in mind may be tighten up a stop, it may be exit a position, it may be, hey, I have a little extra powder on the sideline, so to speak, and I'm willing to invest, and I'm willing to get in if we drop down, only if we drop down, and I don't want to get in near the high, and so you can hold off. Of course, there's a challenges to that strategy as well, and that is if the market just keeps going up, like let's say you said, I'm going to wait until it drops down a little bit further, and then by the time you realize the market has gone up this much, and you're waiting for the pullback to these levels, well, who knows? They may never come. Maybe they will, but just in the future. So we'll see on that. So that's That's the S&P 500 there. That was just a daily chart. Here's the intraday chart of the S&P 500. Let me just zoom in just a little bit here. So this is a 1 minute chart, and you can see we gapped up here above this R2 level right here, and we didn't hold it. We immediately dropped below. Are we going to hold the R1 level here? Well, jury's out on that. If you're a longer term trader, it may not matter. Okay. If you're an investor, it probably doesn't matter. If you're a trader that tends to trade for, a swing trade that may last a couple weeks, it may not matter. Intraday traders, you may find a curiosity here though, and see, are we going to hold this level? If we break below that, are we actually going to end up back down where we started? So kind of a weaker start to an otherwise upward day, an upward move in the market this morning here on that. So obviously that is the S&P 500. Let me go back here though, because I want to point out something to you. If you just look at this chart and you see the sideways move, the pullback, and compare that to the SPX EW, what we see is it's a little bit more bumpy, isn't it? This is the equal weight. This is all 500 stocks of the S&P 500 weighted equally. So we've had a nice steady uptrend on this. And part of this is there's been more volatility in areas like tech or semiconductors or things like that, and that tends to bump around because those tend to be the larger cap stocks, tends to bump around the whole market. But when you factor in some of these other sectors in there, it's smoothing it out. So this has been a nice kind of outperformance on the equal weight here index. Now, if we're talking about this, we can break it down in different ways. There are portions of the market that are doing very well. So for example, I'm just going to pull up a year-to-date chart, and I'm going to pull up the S&P 500 Pure Growth Index here. And let me just see if I'm going to throw on a relative strength here on this. So the relative strength is just going to compare this performance to the S&P 500. You can compare it to whatever you want, but in this case, it's going to be the S&P 500. So you can see growth stocks in general. This is the S&P 500 pure growth. So it's taking the S&P 500 stocks, and a subset of those it's characterizing it as the most growth stocks in the S&P 500. You can see lately this has been underperforming the S&P 500 pretty significantly there. Year to date, up about 23% on this. Now, let's take a little different view here. How about value stocks? Do you see the difference in the chart here? Here's the S&P 500 pure value stocks. It's been outperforming the S&P 500. Year to date, it hasn't been as strong. But so what that means is at the beginning of the year, this underperformed pretty significantly, growth, and now it's outperforming growth pretty significantly. So there's a little shift in the market. Just realize whatever trends that we see in the market, they don't last forever. So just know that that's how that is. Let's look at the NASDAQ now. Here's the NASDAQ. Not surprising, it's up this morning. And so we have bounced a little bit more than the S&P 500. When I'm looking for support levels, okay, when I'm looking at support levels, I'm looking for areas where it has bounced off several times. Okay. This catches my eye right there. Okay. So we bounced off that several times. In fact, close enough probably to call that on that as well. So if I go up here and say, that's kind of a support level, just like with the S&P 500, we're going to look for key support levels. And if we break them, here's another level. If we were to break below this, I'd be going, hey, this is kind of the next support level I'd probably be looking at right here on this. Now, there's other things you can do on this if you want. If you want, you can pull up like a Fibonacci retracement here. Let me let me just clear this drawing set here for a sec. And I'm just going to shrink this down. Let's go down here and let me pull this up. And I'm just going to pull up a fib here on this. I'm going to go from high to low on for this move, particular move right here. See, right, we'll go to the low right about there. And you can see we're right at the one of the main retracement levels. And then if we break below, here's another one. So these are all ways of looking at support there. And then if we do go up, potential resistance up here, and if we change the scale, well up there, that's probably a ways in the future, but I guess you never know on that. But those are all ways of looking at support levels on this. And so what I'm going to do here is I'm going to clear off this drawing set again. Oops, clear drawing set. And let's push forward here. Let's look at, let me just look at a couple things. We talked about the outperformance of value versus growth. Here's the Russell 2000 small cap stocks. It's been holding its trend very well, and relative strength lately more or less flat with the S&P 500, but the general trend, don't confuse a month or two with the overall trend. And we can see that with our moving averages. We're holding that 50-day moving average. That's another key level there on that. Let me just look. I just want to look at one other thing here, and that is dividend stocks. If we look at how dividend stocks have been performing, so this is the Dow Jones US Dividend 100 Index here. In fact, let me switch this over. Let's go to this year chart with the relative strength. Dividend stocks have been having a good year, up 24%. That's close to what the NASDAQ was up for the year, and definitely better than the S&P 500 as a whole, both for the year, because you can tell the green line down here, okay? When you're looking at a relative strength, whatever time frame you're on, okay? I'm on year to date. The green line starts at the red, where the red line is, and it just extends the red line over here. So if you ever want to know on where we are today in compared to where we start the time frame, in this case year to date, you look where the red line is, you look at the green line is, and of course there's been ups and downs along the way, but overall it's up. So it's been outperforming for the year fairly significantly. So if you have one of those funds, and I'm not going to mention any names here, or ETFs or whatever, that are pretty dividend stock centric, then it's I can't guarantee every fund out there, but it's probably outperforming right now. And by the way, if you are interested more in ETFs, we have an ETF. Tomorrow's Trader Talk session, we'll talk about ETFs. I also teach an ETF session on Mondays at 4 o'clock Eastern time. But you can see that that's the Dow Jones US Dividend Index. Here's the S&P 500 Dividend Aristocrats. Not as strong, it's roughly what the S&P 500 has done for the year, but lately that's been fairly strong as well there on that. Okay, so now what's driving the market? Let's go back and look at some other things in the market here. So I'm going to, just for a sec, I'm going to just hide that RSI just to give us a more clear view. One of the big concerns in the market are interest rates in terms of the drag on the potential market here. This is the 10-year, and then you just move the decimal point over. So we're about 4.6% right now, okay? we're at about 4.6%, which is down a little bit. About a week ago or so, we heard about, the Treasury Department may be more active in repurchases, and that tended to have a positive effect. I think actually it was here, and then it dropped, and then it rebounded, and then it went back down. I'm not sure. I may be off on my day there. It may have been right here. But the point is, we'll see, because the general trend, again, I have a 50-day moving average here. The general trend has been up, and this tends to be a drag on the economy. You hear this often. This is a concern. So the question becomes, what drives interest rates? What drives the longer term rates? And so I'm going to give you maybe a few things that can drive that long-term rate, okay? And I'm going to kind of abbreviate because I can't write with this pen very fast. But one of them is inflation expectations. Look, we had a PCE report come out yesterday morning, and it was kind of mostly in line, but the inflation story isn't great right now. It's better than it was, but it isn't great right now. If people expect inflation going forward, they're less likely to buy bonds. If they're less likely to buy bonds, the price of bonds goes down. If the price of bonds goes down, what happens to the interest rate? It goes up. Inflation expectations drive the long-term rate. That's one of the key things, okay? Let me mention another one. Government borrowing, okay? If people expect a lot of government borrowing, which, by the way, these are all related, because if governments borrow, that can increase inflation, right? That's one of the concerns, is if we're borrowing a lot and we have a lot of debt, we kind of need to inflate our way out of it. That's one of the concerns. But if the government is borrowing more and issuing more bonds to borrow, then the supply of bonds is very high. The price is low or goes down. That tends to increase the interest rate, okay? Here's another thing. I'm going to say consumer, I'm going to abbreviate that, demand, okay, for bonds. If there is less consumer demand, okay, if there's less put it this way, if there's less consumer demand for stocks, then there tends to be more consumer demand for bonds, okay? And if there's less consumer demand for bonds, then interest rates would tend to go up there. So a stronger economic forecast is going to tend to increase the rate, okay? So lately, and let me add one more. We'll say monetary policy, okay? Monetary policy. So what do I mean by monetary policy? That's like the Fed, what the Fed does. So, and we can see that in terms of, you hear, is the Fed going to raise rates? Well, we're talking about the Fed funds rate in that case, which is the short-term rate, but all that can bleed down to longer-term rates as well. And it's more than just the Fed funds rate. Stuff like quantitative easing, quantitative tightening, that can affect monetary policy. That's monetary policy as well. Okay, so having said that, what's the Fed doing? What's the expectation on the Fed? Here's a CME Fed Watch tool, which is a third-party website, the CME Group. It's not a guarantee, but it is something that kind of gives us insight as to what the market thinks interest rates are going to do. The current rate on this here, the current rate, target rate, is at the top of the screen. That's where we are. This is now, what we're looking at right here is the September 16th meeting. So that's less than a month away. Roughly 2/3 chance, according to this, who knows what's going to happen. So it's not a slam dunk by any means, but roughly 2/3 chance we stay where we're at. Okay. So that's what the market expects right now. If we push that out to the end of the year, let me go to December 9th, roughly 70% chance, in other words, this plus this plus this, we get at least one rate in the Fed funds rate, one hike in the Fed funds rate through the end of the year. So that's just one of those things of those four that I listed that can certainly affect the future course of interest rates. This is going to tend to, if it goes up, it tends to drag down the economy. Three of those four tend to be working against us right now. One of them actually is working for us. If I'm saying for us, I mean in terms of lowering interest rates. And that is the economy has actually remained relatively strong in terms of revenue and sales and stuff like that. Earnings season, which we're pretty much through, has been a pretty strong one. Now, having said that, we'll see what happens. Kevin Warsh is talking tomorrow at Jackson Hole. He's not one to talk a lot about the future course of interest rates and whatnot, but people will try and read between the lines here. Now, the whole thing with interest rates and where things are going is, and by the way, so in the chat, Trading Growth says unemployment is likely to keep the Fed from raising rates. Yeah. So remember, if unemployment gets higher, the higher unemployment is, the more the Fed would like to spur on the market. That would be lower interest rates. Well, employment has been pretty good. It's been pretty strong. The unemployment rate's been good. So it makes them less likely to. So just keep in mind, the more inflation concerns, the more likely they're to raise rates. The higher unemployment, which is not what we've seen, the more likely they are to lower rates there. So anyway, there's that. Let's go and look at some other factors that are affecting the market as a whole. Here's the dollar index. The US dollar has been falling, okay? And what does that mean? Well, when I say the US dollar has been falling, this is against a basket of other currencies, because the dollar just doesn't fall. It falls in relationship to other things, such as another currency like the euro or something like that. And so there we go. Follow up in the chat. Zing says, Kevin Warsh is purposely vague. Yes, he has been purposely vague on that. So there's a good chance it may not be a big event tomorrow, speaking at Jackson Hole. Probably, who knows, less likely for big movements than when Jerome Powell was speaking, but maybe he surprises us in that regard there. A weaker dollar can certainly affect different parts of the market, including the price of gold. Okay, here's the price of gold. Not a surprise when we've seen more weakness lately. And it's not always a perfect inverse correlation, by the way. There's been times when they've both gone up at the same time or down at the same time. But lately, the drop in the dollar seems to be helping the price of gold. Okay, this is a futures contract. We're not talking about trading futures though today. We're just looking at the price of gold. This is an easy way to look at this. Okay, if I look at trend up in that, well above the 20-day moving average. Who knows? Right now, this looks more like a flag pattern than anything, though. In other words, a bull flag. Market goes up, goes sideways or down a little bit, and then breaks out to the upside. Goes up, goes downward or sideways for a little bit. I don't know. And then a lot of technical traders would say, well, then we'll look for a breakout above that flag. And that may not happen, but that's a bull flag because it's preceded by an upward trend. By the way, when you're in the middle of a downward trend and you see something like this, then we kind of look more for bear flags. Okay, so when you're looking for flag patterns, the trend that we're in is kind of a key factor in there. What other things does this effect? Well, uh, let's look at silver. What's silver been doing? Same thing, same story as gold. Okay. What about copper? Copper's a little bit different. Copper is built a little bit is a little less correlated, I would say, to the U.S. dollar, but it's been relatively not as strong, I guess, but it's more of an industrial metal. It's one that is more of a sign of worldwide demand. We've got some strength here. Is this a resistance level? I don't know. I mean, we bounced off there, but usually one bounce doesn't isn't that discouraging to me in terms of what the trend is going to be. And we kind of have this action going on right now. These higher lows are tend to be more of a bullish type sign. By the way, there's a survey link in the chat, everybody. We appreciate your feedback. And so if you'd fill that out, we'd appreciate it. Also, if you like the session, you'd be doing me a favor. If you click on the thumbs up at the bottom of the page, the like, it helps me. It helps the algorithm here as well. So anyway, we appreciate you there for all you do for joining us here today. Okay, now we're going to look at some individual stocks here in just a minute. Let me just check on time. Yep, we'll look at that in just a minute, but let me just look at some other things that are, driving the market. Oil. Oil has settled down a little bit from where it was a few days ago. A lot of this is just news in the Gulf, and the news in the Gulf changes every day pretty much. You can see the general downtrend that we've had, a general lessening in oil prices. Will we hit, however, is this significant? I don't know. We've got a 50-day here. We're kind of holding the 20-day right now. We've got the 50-day there. We've got kind of this trend. If we break below that, then we'd be looking at a support around here probably. But this is so, I don't know, susceptible to news. And so it can, whatever our technical analysis tells us, if there's action in the Gulf or something, it can certainly change things. That's oil prices. What about gasoline prices? Well, here's gasoline prices. There's a little bit of a disconnect sometimes in these. And so part of that comes down to what we call the crack spread. Okay, let me go and just bring up that. This is basically going to be the cost of refining oil. Okay, this is essentially the cost of refining. The difference between the price of a barrel of crude oil, West Texas Intermediate crude oil, that's what we look at typically. That's the CL we were looking at earlier, and the price of a barrel of gas. Okay. This is the crack spread. Where are we at? We're basically as high as we've seen in a while. Okay. And so that is one reason why, even though when we look at, let me go back here, when we look at oil prices and we see, they're down quite a bit from where they were, over 10% from where they were a month ago. You may not be seeing it at the pump necessarily there. So just keep that in mind. Now, one other thing I want to point out, commodity, I guess I'll call it, crypto. Okay, remember crypto has more, it's a little bit more of a speculative type investment. Again, we're not talking about trading this, we're talking about the price of it. But you can see the jump up that we've had in Bitcoin lately. It's kind of tailing off right now, but it's really, we were kind of in the doldrums on crypto, and you could use an Ethereum chart as well, and you'd see something pretty similar. It's settling down here a little bit. Now, if I were going to do a technical analysis, I'd say potential resistance up here. Lately, as we've looked at this, it has kind of plateaued a little bit. So the question is, where is it going from here? I don't know the answer to that, but I would say one thing that some traders would consider is lately we've had these highs here. Are we going to break to the upside, or kind of, I would say we've been in this like shorter term channel here on this. So Barbara says, is this a flag? This could be a flag, but it's a little bit different. Generally, a lot of times on bull flags, we say we kind of like to see that uptrend preceding it, and then it's part of the continuation of the trend. This wasn't really, it was more of sideways here, and then just this kind of meteoric move up. But yeah, if we break above there, we'd probably call that a flag. That's how that is. We don't know what it's going to do. When you're looking at something like this, sometimes it's beneficial to change, and you can look at we'll say a different time frame here. Let me just look at, let me go to 5-day, 5 minutes. Actually, let me go a little bit longer than that. Let's do it like a 20-day hour chart and just take a look. And so you can see that right here on this. And so if it benefits you, you can maybe look at this kind of sideways channel area that we've been in lately here on this, a little bit more clear on this, and look for breaks above that there. Okay? So, we'll see where we go in the future on that. Now, let's move forward to some individual stocks. One individual stock in the news that had earnings last night was NVIDIA. I say last night, I guess yesterday afternoon. Nice gap up in NVIDIA. Now, the interesting thing with NVIDIA is NVIDIA that beats earnings very often, but kind of historically, the stock's gone down even if it's beaten earnings. In other words, if you go to the Analyze tab here and look at earnings, you can kind of look at past earnings here on this. And we're just looking at the stock price up here. So today we're up here, okay? But notice this, it's a little hard to see. There's a faint line here. That's where the earnings was, okay? Can you see that little faint line right there? That's where the earnings was right there. This is where the earnings was. Earnings, 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 okay? And you can see the green line, okay, right down here, green, is the estimate. Yellow line here is the actual. You can see this is just for earnings, but you can see typically they're beating. Typically, what's the stock doing? It's going down. So that's kind of it's just a quirky thing with NVIDIA, but not today. Today it's actually doing fairly well. And so that's that's how that is. So if you want to look, let me go. Let's go. Let's just do intraday here. So, come on. Sorry, let me try this one more time. And zoom in this way. So here we go. And this is the the after hours. You can see the after hours trading on NVIDIA. It as people interpreted it, they found it to be they like what they saw. So right now that's what NVIDIA is. We also had some other earnings on this. Oh, by the way, with NVIDIA, NVIDIA says they expect to grow their revenue by 70% in fiscal year 2028. 70% revenue growth for the largest company by market cap in the world. That's massive. Now, a lot of that may be priced in, but that's quite amazing. And keep in mind, that's revenue. That's not necessarily earnings. But the issue is with this, they say they're, it may be, uh, it's a supply constrained outlook. Okay. So it's not demand constrained. It's not that people don't want the product. It's just they may not be able to produce enough of it there. Okay. So that's a nice jump that we've seen in Nvidia here on that. Now we've had some other stocks that had earnings as well. And in fact, Bogus Chinchilla in the chat mentioned some of them. So Okta is one of them. Yeah, there we go. Nice big jump. Okay, nice big jump on that. And CRM, Salesforce, nice big, not just a big jump. Look at the difference between those charts. Okay, they're both great. I mean, not, anybody be happy with this chart, I think. But actually, this one's not terrible. We're actually not that far off the high here. But when you're looking at a big jump like this, kind of what you want to see is it jump up and continue to go up. This is tested a little bit lower. So the intraday actions on that is a little bit more up and down perhaps. But when you look at Salesforce, we're near the high. I mean, it gapped up and is continuing to go up. So positive earnings on that. When you have a chart like this, very often what traders will do is they'll say, this gap now represents a support level on that. Okay. So we'll see. And the same thing would be true on any of these that have a gap. You take the low price of the day and consider it as a support level. Let's see, what am I missing here? I don't know. Okay. How's this affecting? Well, the markets are up. This probably is helping the markets. Here's the semiconductor index. Maybe not. What was our percentage gain in Nvidia? Nvidia up 7%. I would have to say I'm actually a little surprised that the semiconductor index is not up more than that right now. Okay? If you want to break it down, you can always go to MarketWatch, go to Visualize. Here's our S&P 500. I'm going to go to Technology. Here's Technology. And here's Nvidia. And you can see, it's a little mixed. Not everything is riding on the coattails of Nvidia today. Here's the semiconductors right there. Okay, that's obviously probably almost half of IT. But Nvidia is this nice bright green. Broadcom's looking pretty good, but most everything is not doing so hot there in that. Interesting. So there you go. Let me go back and go to my charts because we're getting a little bit lower on time. Let's just talk about a few things else here. Let's look at the chart on Meta. Meta had this report yesterday. It was kind of interesting because we were looking at, in fact, in Trader Talks yesterday with Kevin, we were looking at it. They've reached an agreement with states attorneys general, a settlement. And I can't remember the exact amount of the settlement, but it's a big settlement, like $20 billion or something. And immediately it jumped up and then it sold off. Okay. By the end of the day, it was low. Well, no, intraday it went lower, and then by the end of the day, it was here. And then it is resuming up here on this. Right now, if we consider Meta and we go out, let me just go out a little bit farther. You can see it's kind of in this more or less sideways move here. Was this enough to shake us out of that? No good sign yet that that's going to be the case. First thing, we'd probably want to break above our more recent highs. But even after that, before we really, there's some formidable resistance levels we'd probably look at in terms of Meta right now. So not necessarily a significant change in that. Laura corrected me, $18 billion was that. Thank you, Laura. Okay, we're going to kind of go rapid fire here and just look at a few more stocks that had either earnings this morning, BBY, earnings this morning, initial gap down. It's recovered most of that though, down about 3% right now here. So initial reaction was worse than the subsequent reaction has done better. Dollar General had earnings this morning. It's positive. Nice gap up here on this, continuing up. And so the market is reacting favorably to Dollar General. Dollar Tree. Initial reaction way down on Dollar Tree. Again, it's made up most of it here. It'll be interesting to see on this one because we had a pretty solid uptrend on this. This would normally, if we had earnings and we stayed down here for the day, what we'd probably say is that we're breaking the trend on that. But we've actually resumed ourselves pretty close to the 20. So I'd say, maybe we got to wait a couple days on that. Let's go to another one that had earnings this morning, and that is Hormel. Here's Hormel. This one, not so great. It gapped down and just kept going down here on that. You can see that. Here's the earnings, and it's still kind of digging itself into a deeper hole right now on Hormel. Upgrades, Okta had an upgrade. Well, we had earnings. We already mentioned Okta on that. SNPS had an upgrade. FSLR had an upgrade. SQM had an upgrade as well. Downgrades. And here's an interesting downgrade. This was on Abercrombie & Fitch, because look what happened to Abercrombie yesterday. Massive move up, but Citi downgraded them after that. They said they downgraded to a neutral from a buy with a price target of 156 up from 135. So kind of interesting because their price target was down here, 135. Price target, they've moved up to 156, which is kind of roughly there. Before they had a buy on this, I mean, it makes sense, I guess. They had a buy on this before, and they had good earnings. And essentially what they're saying now is they say, hey, it's made up most of that, and therefore we're going to call it more of a neutral here. Citi views the company's Q2 results as impressive, but sees a balanced risk reward with the shares up 36% there on Wednesday on that. So there we go on that. So that's the upgrade. That was a downgrade on ANF. A couple more downgrades, and then we're going to call it a day here. Hold on. Let me clear off my drawing there. And you can see we had a downgrade RF, and on NVO, Novo Nordisk, we had a downgrade as well. That's from Deutsche Bank. And that seems to be, maybe weighing on this a little bit here, down 3%. And then last but not least, we've got Celsius with a downgrade. Deutsche Bank downgraded Celsius as well to a hold from a buy with a $35 price target. I think I said that wrong. I said from a hold to a buy, from a buy to a hold there on that. Okay. All right, everybody. Hey, thanks for joining me today. Remember, there is a survey link in the chat. We appreciate your feedback. I appreciate Mike for helping me out in the chat as well. Invite you to follow us on X at Brent Morris CS, at Mike Fairborn CS. Make sure you check out our various webcasts on the Trader Talks channel, including Trading with ThinkScript. If you want to like up your level on Thinkorswim, check out the Trading with ThinkScript webcast. That's Thursdays. That's today, by the way, at 3 o'clock Eastern time. All right, everybody. Have a great rest of the day, and we'll see you later. Bye-bye.